Rod Kusin and Spooman for Risk, February 14th, 2019, all times on the Charter Central Standard Time. We've made several videos for today. This is a recap. We left the last video, it was about an hour long, and it just was tracking the premium in concert with the market profile. We won't comment about that, it speaks for itself. But I wanted to show you the automated signals that occurred after we left. And this last short, okay, after that last short, we turned the conditions of the strategy so that the only trades that it could take would be long, all right? The only trades that it could take would be long. And so we don't have any more short signals after that, although we do have some evidence of various conditions of a short, which we'll talk about. I'm just here to show you some of the automated signals that came off of the strategy. And we're going to watch and look very carefully at the premium to use this as an opportunity to learn a little bit about how to read the premium. So from this point forward, our first signal, as you see, comes in right here. All right. Now, in all honesty, that's not a bad place to take a long trade. It doesn't really produce much, but there's divergence on the premium. If you look at these lows here on the premium here, and then again here, yeah, that's enough to suggest that there's some divergence here. This thing ought to move back up, but it doesn't take into consideration the market profile, and that's what we were focusing our attention on earlier. This is right in that just past noon, and we had left you in that discussion knowing that the area around 49, if I'm not mistaken, yeah, around 49 was, no, it was 48, pardon me. 48 was a low value area, a low volume node. Let's make that more clear. A low volume node, which you could check on the previous video. There was low volume at around 48 and a quarter or so. So while you've got a signal there, if you looked on the volume profile, you could see that there was maybe a better area of repair a little lower than that. And sure enough, as you get into this low, which is now at 50, we finally get another signal. And that's still not quite low enough. If you look on the profile of the previous video, the low volume is around 48. Nevertheless, look at where we are on the premium. If we compare this, we got this dip here, right in there. Look on the right screen here, right? There's a nice dip on the premium, and then you get divergent right in here. Okay, oops. You get divergent. Come on now. Right as we're turning in here, you get divergent again, and you get your signal. And so that kind of suggests, you know, because of the divergence between here and here, this ought to move up higher. Now, bear in mind, if you look at where we were at on the premium, right as we came down to this low, look at the value of the premium here. The fast moving average is at -64. The slow is at -37. 64 and 37. Where are you at here? 66 and -60. And what does that tell you? We're actually lower here than we were when the Spoos pivoted here. So that is a heads up. We could come down again, and therefore, whatever rally we get out of this is suspect. It's liable to come down again. Doesn't mean you can't take a trade, but you got to be cautious about where you're going to exit this trade, because this is a heads up. It's liable to come down again. So as we move up, and we'll just look at the premium here. All right. As you move up to this point here, just look at where the highs of the premium were here. I know it's very grayed out. That's just so that you got enough to see where the premium is. We got to move higher. We move higher. And as we do, the highs of the premium become divergent again right in here.